Hey guys, what's up? It's me, Jonathan, and welcome back to Money Talks, where we want to offer you financial information and meet you where you are financially so that you're able to stick to your budget, manage to pay off your debt, and begin to save on your path to building wealth. Today, guys, I want to talk to you about specifically what are you doing or what should you be doing when you're going through the process of buying a home. First time home buyer, what do you do? So, if this is your first time joining me here on the channel, go ahead and hit that subscribe button and you'll be notified every time I upload a new video. So it's a very exciting thing when you make the decision that, hey, I want to start buying and owning my home rather than renting. But how do you know when you're ready and how can you really get prepared? The first thing I would tell you is, number one, at bare minimum, did you get rid of all your credit card debt and car loans? That's number one. The reason why is it's not that you couldn't buy a house with those things. It's that it will make it easier for you to handle the responsibility. And number two, when you think about what is going to actually be your expenses for your home, first you have to realize when you do sit down and look at, hey, I'm going to get pre-approved and it looks like my principal and interest should be $1,000 and I was paying $1,500 in rent. Well, that's just your principal and interest. Second piece of your purchase as far as your home is concerned is your taxes and insurance, and if you have to pay private mortgage insurance. Those pieces added together could keep you at $1,500, but likely over the next year, probably within the next year, when the homes get reassessed and your property values go up, you will be paying more a month than you were and at a faster rate than you were when you were renting. So it's important that you understand that when you look at 25% of your income and include your taxes, insurance, all out the door in that 25% and keep that number, go get to a house that you like, but try to keep that payment of that home as low as possible. That's very vital for you to set up a good, healthy financial situation for yourself. Meaning you have the cash flow you need in the month and you're not screaming so tight, because as you progress each year, again, the cost of that house should rise if you picked it correctly. And when it rises, your taxes go up as well. The third, do not think that just because you just bought a new build home or you bought a home that had been there for a while, you're not going to have yearly repairs. Average yearly repairs will be about $1,500 to $2,000 on just regular maintenance for the home. That can mean repainting. That can mean something small goes out in one of your appliances, air conditioner, things of that nature. So it's very important that you always have not just your emergency fund, but have an account that's purely dedicated to taking care of those regular maintenance needs every year of the home. And if you're able to one year be able to save a little bit, carry it forward, because again, it's a house, it's a responsibility. And much like a car, something will occur. And it's a lot easier if you already have that money sitting there and then you have your emergency fund, that you take care of those things as quick as possible so that the problem that you're experiencing doesn't escalate to other areas. Next, when you think about purchasing your home, you want to think about, okay, I've saved a little money. I've put money aside for my emergency fund. I've even cleaned up my car loan and credit card debt. Now what? What you want to look at is, based off your income, there's always going to be a house number that you can afford. And typically when you go into a mortgage lender, they're always going to be looking at the max that you can afford. Not necessarily so you always buy more home than you're worth, but it's a lot easier when you're out there searching so that you don't go back and forth trying to up the amount because of the home. It's easier for you to start with the largest number possible and come down. So it's very important that you take the responsibility of when you have that conversation with a mortgage loan officer. If you can't do the full math yourself, just simply say, hey, Here's 25% of my income. I'm looking to get approved, or I want to buy a house within this range. What number is that? Then look at the difference between what your number is and then what is the total amount you can get approved for. The reason, another good reason, again, why I say, hey, go ahead and get rid of the car loans. Go ahead and get rid of the credit cards. Because if you do those things, not only does it free up your cash flow in the month, it helps you qualify for the home that you're seeking. Because remember, you have to look at your debt to income in this situation. The less debt to income you have, or I'm sorry, the less debt you have, the easier it is for you to get approved and qualify for what you would desire. And understand, it's not about soaking up all your debt to income in a home. It's just so that you have an easier process long overall with going and qualifying for this home. It's a very vital decision to make the purchase of a home. And it's really important that you start to think, okay, before you go start searching, why don't you go ahead and get pre-approved? What's the timeline that you're looking at? Typically, your credit is good for about 120 days. Maybe you're shopping around to try to figure out what the cost may be. That's a good thing to do. But keep in mind, the credit rules have actually changed when it comes to mortgages and when it comes to car loans. When you pull your credit with a mortgage lender, you have about 10 to 15 days to pull your credit with several other mortgage lenders so that you get an idea of shopping around and understanding what the fees are. You need to understand what each charge means, who's charging what, and what is going to be the best scenario for you. When you're looking at to evaluate these fees on these loan estimates and rate sheets that people hand to you, the biggest thing that you're trying to do is go with the lowest cost. In the time like this, often the rates are going to be similar. And even if the rates are not similar, you still have to consider now what's the difference in the rate that you're paying and how much more in cost or how much less in cost are you paying. Because in the purchase scenario, in a house buying scenario, you make money on the buy. That means the less you spend on the front end, the more money it allows you actually, and faster it allows you to make money within the house. Same thing if you were refinancing your home. So I want you to go ahead and get pre-approved. I want you to make sure that you know what you can afford. Again, 25% of your income all in. That means if you have to pay PMI, if you have to, your taxes and insurance, things of that, all those things wrapped up with your principal and interest, taxes and insurance, PMI, all in, 25% of your net income. That means your take home. That means taxes have already been taken out, all those things. It's important that you really understand this because not only is a home a huge responsibility, but getting the math and healthy financial scenario right for yourself will pay you dividends on this house. Lastly, I want you to think about what's your plan for this home. If this is your first time buying a home, the one thing I would encourage you is it's likely it's not going to be your home for the rest of your life. Second, when you think about it, regardless of what the scenario is, whether this is you and your husband retiring, whether this is your first home, whether you just got married and you and your wife decide to buy a home, whatever the case may be, whatever your situation is, understand a home is simply this. It's simply an investment. It goes up in value and you need to treat it as such. It's not special, it's not different because it's your home. It's a home in an area and you want to pick an area where the values have been going up. You can have your realtor show you values for the last 2-3 years so you can get a gauge on what that looks like. But simply don't allow your emotions to get into this purchase. It is a big deal, but if you make the wrong decision on this deal, it can cost you thousands of dollars. It's not $100 mistake when you're dealing with a home. And I want to encourage you, this is an exciting time. And when you get down deep into the details of home buying, it can actually get so nuanced and so many details that you just don't want to deal with it and you end up drained. But I will tell you, if you get your emergency fund in place, if you pay off your credit cards, pay off your car loan, get rid of that stuff, credit score is high, you know what you want to afford, you know that your top number should be 25% of your income, of your net income or less. If you're a first-time home buyer, you've already lined up your first-time home buyer program, so you know what you're paying for when it comes to closing and what's coming out of your pocket and what's not coming out of your pocket. If that's a program you chose, you know all those things. If you do all those things and then get your pre-approval, you're ready to shop. And after that, you're just simply going through the loan process, and it won't be as difficult as it seems. If you've been on your job a couple of years, if you, again, taking care of your credit, and you have the money for your down payment, and you have those cash reserves, all those things factor in and make it easier for you not only to apply, but go through the loan process a lot quicker. And so you will, and despite who you may be working with, it will seem very seamless. What are some costs you should be aware of? Typically with a purchase, you should always be aware of the appraisal. You should always be aware of the title. Title can include settlement charges, taxes, lawyer fee, recording fees, all those different things. Really understand what's in these costs. Not saying things can be negotiable, but if you have an application fee, that's not something everyone charges. If you have a prepayment penalty, meaning you want to pay off the home early, you shouldn't be charged for that. Those are things you want to watch for. But overall, it's your the way this system is set up, it's your responsibility to understand what's going on in this purchase and understand what you're getting, what you're paying for. And if you don't understand, it's okay if you don't sign. But when you sign, you are taking that responsibility for that. The good part about this scenario is if you have questions, make sure you get your questions answered and you feel comfortable and confident that you understand before moving forward. This is a huge decision. It's an exciting decision. And if you're purchasing a home right now, I'm so happy for you because it's a huge accomplishment. It's a big step towards your financial goals and your wealth building. But I want you to understand, this probably won't be your only home. What's going to be next? Will you rent it? Will you sell it? Where are you going to go from here? I hope you liked this video, guys. If you do, go ahead and give it a thumbs up. And if you haven't already, please subscribe to the channel. And I can't wait to see you guys in the next video.